There's technology that's putting you out of business all the time, and then there's new technology that will make you a fortune and put you in business. If you're a critical, skeptical curmudgeon, you just focus on the negativity and you're just negative on everything. I hate that, that's bad, I hate that, I don't want to change. And if you're constructive and cheerful and if you're an optimist, you're like, well, I won't be, my 8-track tape collection isn't that valuable anymore, but I do have unlimited free streaming music.
The credit and securities laws are already quite developed. You don't necessarily need new laws or regulatory changes to launch business models leveraging Bitcoin. If the underlying asset, Bitcoin, is already accepted as property commodity, and you can use the existing legal framework. That is a key insight. You don't always have to wait for regulation to catch up completely. If you work within existing recognition, you can begin.
Well, I think the good news is Bitcoin has already got the best regulatory treatment of any digital asset in the world, and has, right? It's globally recognized as a digital commodity and property, even in China. In China, where crypto trading is illegal, where crypto mining is illegal, Bitcoin mining is illegal, Bitcoin holding is not illegal, and Bitcoin is recognized by the courts as digital property. As property, you can own it. So we're already starting with a good place. If your business model is digital credit, we've already got pretty well-developed credit laws. The U.S. has the most advanced rules. So if you're a U.S. company, there are 1,000 ideas. I just gave you who knows how many different ones. There's 1,000 things you could do starting with Bitcoin in a publicly traded company right now. You don't need any regulatory changes. You don't need any new laws. You can go at it. If you're a Bitcoin treasury company outside the U.S., look, the Swiss are a bit behind on some things. The Europeans are slightly behind they're slower on ATMs. The Swiss are slower on preferred stocks. The Japanese are a bit slower on this and that. So you have to go and lobby those regulators and those politicians to upgrade and update their exchanges, their regs. Sometimes the tax code is prejudicial, like in Japan, the taxes on Bitcoin were much higher than the taxes on equity. So any company has a responsibility for advocacy on behalf of its investors, and on behalf of its constituents. We think about what's good for the credit buyers, and we think about what's good for the equity holders, right? We think about what's good for the world and what's good for the United States. And we only advocate for things that are good for everybody, right? The thing is, there are no losers here except the 20th century antiquated oligopoly that is selling inferior credit instruments. So it's like you just invented the car, and there are a lot of horse and buggy manufacturers that are going to be out of a job. And if you feel sorry for them, no one's getting cars. And we've got the atomic-powered flying faster than light hover car. And yeah, there's a lot of people selling antiquated, crappy vehicles, and no one's going to want to buy them anymore. But that's technology. The human race has got to move forward. So if you're offering digital credit, digital capital, digital equity, it's a better thing. And ultimately, you're feeding the 400 million companies. Look, for every company that can't sell a crappy credit instrument, their treasurer can buy our credit instrument and get triple or quadruple, and maybe that'll save the company, right? So yeah, there's technology that's putting you out of business all the time, and then there's new technology that will make you a fortune and put you in business. If you're a critical, skeptical curmudgeon, you just focus on the negativity and you're just negative on everything. I hate that, that's bad, I hate that, I don't want to change. And if you're constructive and cheerful and if you're an optimist, you're like, well, I won't be, my 8-track tape collection isn't that valuable anymore, but I do have unlimited free streaming music.
Yeah.
And I guess, I lost a little money invested in whatever record stores, but I also bought some Apple stock and made a fortune. Right? And I would say all these corporate operators, their job is, look at anticipate the future, look at the past, move forward, do it in the most graceful, civil, responsible, elegant fashion you can, right? The world isn't the way it was 100 years ago. It won't be this way 100 years from now. That's the human condition. If there wasn't work to do to move us from the past to the future, you wouldn't have a job. There'd be no reason to get up in the morning. There'd be nothing to get excited about, right? You're irrelevant. And I got to tell you, you don't want to wake up one day and think, I'm irrelevant, nobody needs me, no one will care. And the way we did it for the past 100 years is probably just the way we should do it forever.
Suppose you issue credit that is backed 10 times by Bitcoin. So if the credit issued is $1 and you're holding $10 of Bitcoin attested as collateral, even if Bitcoin falls in price, the credit remains supported. If you embed mechanisms to adjust dividends monthly rather than yearly, you can dynamically manage risks. He draws analogies. This is similar to how a central bank sets an interest rate on its currency. You could set an interest rate, a dividend, on your digital credit unit. This becomes the kerosene of digital capital, the highest refined outcome of Bitcoin treasury engineering.
Most highly refined crude oil. It's pure liquid energy, right? It's jet fuel. You put it in rockets. You can't refine oil more than kerosene. So it's an important metaphor. It's the cleanest, highest grade distilled liquid energy, like pure grain alcohol, right? That's what you're talking about there, from a bunch of potatoes, stack of potatoes, and out comes pure grain alcohol. The equivalent of kerosene in the Bitcoin industry is a treasury preferred credit instrument like Stretch. So on one side, you have digital capital, Bitcoin, and Bitcoin is a long duration, volatile, high energy, high performance source of capital. Long duration, think of it in terms of 240 months, 20 years. If you want to get the optimal performance, you're going to hold it for 20 years. It's a 10 to 20 year type investment.
Right.
High volatility, right now it's about 45 vol. Implied vol, it's been 50, it's been 60, it's been 70 vol. And high performance, appreciating 50% a year.
Right.
So that's the raw commodity. What happens if I strip away the volatility, strip away the risk, strip away or compress the duration, translate it to a given currency and extract the yield? Right? That's what a treasury credit instrument or treasury preferred is. So that's what Stretch is. The idea is you build something that's got 1 month. I'm going to give you 10% dividend yield for 1 month. The duration is 1.
Yeah.
The yield is 10%. The currency base is US dollars.
Right.
The spread is if the risk-free rate is 400 basis points, and that's a 6%, 600 basis point credit spread. I've extracted a 600 basis point spread for the next month in US dollars.
Right.
Maybe I 5x over collateralize it. Maybe I 10x. If raw Bitcoin is 1 to 1. It's if I have $1 of Bitcoin, I have $1 of Bitcoin. If Bitcoin trades down 50%, I've lost half my money.
Right.
But if I 10x over collateralize something, I have $10 of Bitcoin. I have $1 of Stretch. If Bitcoin trades down 50%, I still got $1 of Stretch. If Bitcoin trades down 90%, I still have $1 of Stretch. The statistical odds of Bitcoin trading down 90% are point something, right? It's a small percentage. So by over-collateralizing, you strip away the risk. By structuring it to adjust, if you put a set of adjustments or representations below par, below 100, you start to strip away the volatility on the downside. If, with Stretch, what we did is we put in a call option at 101, and then we told the market we're going to sell it actively at 100 or better.
Right.
And then we also told the market we're not going to sell it below 99. And if it's below 99, we're going to raise the dividend. Okay, so you're kind of collaring this instrument And then the last point is we created a preferred instrument where we pay it monthly in cash, and then we adjust the dividend every month. So it turns out if you scan in the history of preferred stocks or the history of the credit markets, no company has ever issued a preferred stock where the management has discretion to adjust the dividend every single month. Like, there are some preferreds that are floaters where they set the credit spread at 350 basis points over SOFR, and they will float with SOFR with the risk-free rate. And there are a lot that are fixed where you set it at 7% and the principal will trade up and down if SOFR falls or rises. But the idea that the credit spread is completely variable is a new idea. But by the way, not a new idea in the world of credit, because who does this? Well, nation states do it.
The Fed.
Right? Like, literally, that's what a
Right.
central bank does, right?
Right.
That's what every central bank does. They set the interest rate on their currency.
Yep.
What we did
To
was
keep it
just
stable.
copied, traditional bankers, and we set the interest rate on our currency, which is stretch. So that is the kerosene of the Bitcoin, treasury company, or of the digital assets industry, because it represents the greatest degree of financial engineering, just like kerosene represents the greatest degree of petroleum engineering, right? I've done the most refining. I've distilled the highest quality product. You could imagine, for example, you could extract the same product in yen. So I want to create a yen instrument that's 10,000 yen that pays, a monthly yen cash yield or a cash dividend. I change that every month. And now I've created the equivalent of kerosene for the Japanese market. And of course, what does everybody want? Everybody kind of just wants, I've got some money I need to park for the next 90 days. If I put it in the bank in Japan, I get 50 basis points or less. I put it in the bank in Switzerland, I get minus 50 basis points. If I put it in the bank in Europe, I get 200 basis points or less. If I put it in the bank in the US, I get 400 basis points or less. And so what I'd like to do is put it in some kind of structure where I'm going to get my money back in 9 months or 6 months or whatever. The principal's not going to move around, but I'm going to get 10%.
Right.
Everybody wants a bank account that pays 10% instead of 4%
They
or
do.
2% or 0%.
One of the key themes he returns to: human progress means we cannot stay stuck in the past. The world won't look like it did 100 years ago, and it won't look like it does now 100 years in the future either. If companies, treasurers, investors don't adapt, they risk becoming irrelevant. He frames investing in Bitcoin and digital credit not as speculative hype, but as responsible planning for capital efficiency, portfolio optimization, and structural innovation.